Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. So welcome to this podcast, episode 114, titled Top Lithium and Hydrogen Stocks. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, and information, and resources. And look at my newly revised website at investingforthesoul.com. Tell me what you think. Now remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page located at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast's webpage for links to the actual articles for more company and stock information. Also, some companies might be covered more than once, and there is also one article linked below that time didn't allow me to review here. Now, many ethical and sustainable investors are excited about investing in battery metals. So I thought to begin this podcast with this article. It's titled, What are the top 5 largest lithium companies in the world? It's by Joseph Morton and found on mugglehead.com. Here's some of what he has to say. 1. Ganfeng Lithium, largest lithium salt producer in China and third in the world. Ganfeng Lithium is a global company specializing in the production of lithium, lithium-based products, various metals and batteries. Established by Li Liangbin in the year 2000, the company is headquartered in Jinyu, Jingxi, China, and operates both domestically and internationally. With a market capitalization of approximately $35 billion, it holds a significant presence in the lithium industry. The company doesn't have one property, but instead actively engages in overseas investments in lithium companies and projects as part of its strategy to secure long-term competitive resources. The company holds ownership of 3 lithium brine projects located in Argentina and serves as the largest shareholder of Lithium Americas. 2 is Albemarle, world's largest supplier of lithium for EV. Albemarle Corporation is a US-based specialty chemicals manufacturing company headquartered in Charlotte, North Carolina. The company operates in 3 main divisions: lithium, bromine specialties, and catalysts. When it comes to global lithium and lithium storage product production, Albemarle, along with lithium companies SQM and Livent Corporation, collectively account for slightly over half of the total production, Meanwhile, just under half of the world's lithium supply is produced by various entities within China. Greenbushes in Western Australia is one of Albemarle's largest projects. It's a joint venture mine shared with Talison Lithium, a subsidiary of Tianqi Lithium Corporation. Albemarle's market capitalization is roughly $30 billion. 3. SQM, largest lithium producer in the world. SQM is a Chilean chemical company renowned for its role as a prominent supplier of plant nutrients, iodine, lithium, and various industrial chemicals. For the fiscal year 2019, SQM reported lithium-related revenues amounting to US $505 million. Notably, in 2021, the company witnessed a substantial increase in its lithium revenues, reaching a total of $936.1 million US. 4. Tianqi Lithium controls over 46% of global lithium production. The Tianqi Lithium Corporation hails from Sichuan, China, and operates primarily in mining and manufacturing. The company has a market cap of approximately $16.5 billion. 5. Mineral Resources operates 2 significant properties in Western Australia. In recognition of its significant market presence and capitalization, Mineral Resources earned a coveted spot in the S&P ASX 50, that's Australia, in June 2022, designating it as one of the 50 largest companies trading on the ASX in Australia. Its market capitalization is in the range of $11 billion. Mineral Resources operates primarily in the iron ore sector, but is also actively engaged in the mining of hard rock lithium, with operations in 2 significant locations within Western Australia, Mount Marion in the Goldfields and Wagina in the Pilbara." End quotes. A second article with a related theme is this one titled EV Stocks versus Battery Metal. Which green investment should you choose? It's written by Adam Othman and seen on fool.ca. Here's some of what Mr. Othman says. 1. Lion Electric is a $559.76 million market capitalization vehicle manufacturer, primarily focusing on the production of electric school buses, trucks, and other commercial vehicles. With little competition in the EV space in Canada, its focus on commercial EVs gives it a niche it can enjoy without competing against industry giants. That said, it is not a profitable company right now. Despite its small presence, this EV stock can deliver stellar long-term returns as the broader industry grows. 2. American Lithium is a metals and mining company primarily engaged in the exploration stage. The Canada-based company focuses on acquiring, exploring, and developing lithium deposits. A small name in the mining industry, it has a $450.78 million market capitalization. American Lithium stock is not the biggest Canadian lithium stock, but it's worth watching closely. End quotes. Now, diversifying internationally is often considered a good idea. Hence, I bring these articles from Canada for investors both inside and outside Canada. This article is titled 2 Canadian ESG Stocks for Ethical Investors. It's by Christopher Liu and also found on 4.ca. These are some comments by Mr. Liu. 1. Capital Power Corporation's mission is to provide responsible energy to the world. The $4.7 billion growth-oriented company is well positioned to support the low-carbon energy system. Its thermal and renewable assets have a combined generating capacity of around 7,500 megawatts. On March 13, 2023, Ethisphere named the Edmonton-based power producer one of the world's most ethical companies for the 5th straight year. In the first half of 2023, revenue and net income rose 76.9% and 88.7% year-over-year respectively to $2.1 billion and $370 million. Capital Power has raised dividends for 10 consecutive years and provided dividend growth guidance of 6% annually through 2025. Capital Power pays a hefty 6.12% dividend. And 2 is Magna International Inc., is at the front and center in the automotive industry's drive to deliver more electric vehicles. The Canadian auto parts maker raised its sales forecast for fiscal 2025 because of the sustained, if not increasing, demand for parts, sensors, and electrified powertrain systems. The $22.8 billion company's primary goal is to create a better world of mobility and achieve net zero by 2050. According to its CEO, Swami Kotagiri, Magna can achieve the target by addressing the emissions in their manufacturing facilities and the entire supply chain. Magna will use 100% renewable electricity in Europe and globally by 2025 and 2030 respectively. In the first half of 2023, Magna's sales rose 14% year-over-year to US $21.7 billion, while income jumped 128% to US $548 million. Magna also pays a decent 3.06% dividend. End quotes. Now, this next article talks about the opportunities in the hydrogen industry. It's titled, "These two dividend stocks are investing in this niche industry. Should you do the same?" It's by James Brumley and found on 4.com. Now, here are some quotes from Mr. Brumley. Market veterans will likely recall that hydrogen fuel cell stocks like Plug Power and Ballard Power Systems were all the rage at one time. This alternative energy was going to change the world, after all. And then nothing happened. As it turns out, the world wasn't quite ready for fuel cells. This industry's stocks have mostly struggled for the past couple of decades. You might want to put these tickers back on your radar, though. A couple of major oil companies recently made investments in hydrogen-based power solutions, thinking the movement will eventually displace the oil and gas business. Chevron recently acquired a majority stake in a young company called ACES, Advanced Clean Energy Storage, while BP just led a wave of funding for Advanced Ionics, which develops energy-efficient electrolyzers that ultimately generate hydrogen, which can then be converted into electricity. Car makers are on board too, and have been for a while. They're ramping up development, and Toyota is leading the way. With its hydrogen engine technology now well refined, the company hopes to sell 200,000 such vehicles by 2030. If the concept proves successful, look for other automakers to augment their current EVs with yet another alternative to carbon fuel cars. Pragma Market Research estimates the world's hydrogen-powered vehicle market will swell from last year's $1 billion to more than $43 billion by 2030. So if hydrogen fuel cells and hydrogen power in general are finally moving into the mainstream, which of the related stocks are worth owning? The aforementioned Ballard Power Systems and Plug Power are two tickers at least worth adding to your long-term watch list. Anyone interested in jumping into the hydrogen power movement at its current stage, however, might do best with Bloom Energy. It's not one of the more familiar names in the business, although it arguably should be. It's a $3.5 billion organization, and while not currently profitable, it's nearing that point. In fact, the analyst community is calling for a swing to a per-share profit of 39 cents on revenue growth of 30%. Then things are projected to really start to take off. Bloom's systems are also readily scalable, meaning their users can fine-tune the amount of power they're producing and then add or subtract capacity as needed. Its customers include Honda Motor, Alphabet's Google, Walmart, and IBM. The advent of artificial intelligence and the giant data centers it requires is proving a particular boon for Bloom. Although most of its customers only need these fuel cells for backup power now, as hydrogen production initiatives like BP's Advanced Ionics and Chevron's ACES Delta gain traction, don't be surprised to see hydrogen fuel cells evolve into a primary power source. The only catch with Bloom or its rivals? Buckle up for plenty of continued volatility and be prepared to hang on to any of these stocks for a while. Hydrogen power is here to stay, but it's hardly on a reliably firm footing yet. End quotes. Now, our last article brings us back to familiar territory. It's titled 7 Best Socially Responsible Funds. It's by Jeff Reeves and found on money.usnews.com. Here is a quote from Mr. Reeves and his picks. There are no easy answers when it comes to how to invest in a world like this, but thankfully, there are a group of socially responsible funds out there that try to focus your cash behind some of the better companies and leave out some of the bad actors. It's not perfect, of course, and the goal of most investors remains to make money and not just feel good about their portfolio. That said, the following investments are well-established and diversified ways to invest with environmental, social, and governance priorities in mind, or ESG in short. So here's his list. iShares ESG Aware MSCI USA ETF, Vanguard ESG US Stock ETF, Nuveen ESG Large Cap Growth ETF, Nuveen ES Large Cap Value ETF, iShares ESG Aware MSCI EAFE ETF, iShares Global Clean Energy ETF, and Parnassus Core Equity Fund. So that's his list, end quotes. And one other honorable mention, title Solar Power Stocks, the winners and losers of 2023, so far on barons.com by Avi Saltzman. Well, these are my top news stories with their stock and fund tips for this podcast titled Top Lithium and Hydrogen Stocks. Now, please be sure to click the like and subscribe buttons on Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. that helps bring these podcasts to others like you. And please click the share buttons and share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these very troubled times. Contact me if you have any questions. Thank you for listening. And again, please look at my new, totally revised website at investingforthesoul.com. Tell me what you think. Talk to you next on October 6th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.